I thought it would be a really fantastic idea to sit down with one of my preferred lenders and talk about the mortgage rates and what's going on and some options for you as a buyer. And we are going to get to that interview right now. Hi, Anita here with the Yellow Brick Group powered by EXP, and I am sitting here with one of my preferred lenders, Matt Cochran. He's actually a senior loan officer here at Fountain Mortgage. And you know, with the interest rates fluctuating so much and there just being a lot of things going on in the market right now with interest rates and buyers not for sure whether they should buy right now or wait or what have you, I just thought it would be a really fantastic time to sit down with Matt and talk about how a buyer such as yourself can get into the market and how the decisions that you make and how partnering with a fantastic lender can actually help your mortgage monthly payments decrease. So should we talk about some of that today?
Yes, thanks Anita. So I'm Matt Cochran, Fountain Mortgage. Something that a lot of our buyers, a lot of people are buzzing about is this 2-1 interest rate buy down. So the way that works is, let's just use an example of a purchase price of about $300,000 and putting 10% down. So if we take just a ballpark interest rate for today's market of about 6.5% on a 30-year fixed, the 2-1 buy down allows somebody to have, in this scenario, a 4.5% rate in year one, 5.5% in year two, and then it would go to the 6.5% in the third year. So how does this work though? You know, who pays for it? So the cost for the 2-1 buy down in that scenario would be about $6,000. So what a lot of our buyers will do is have the contract structured to build that into the purchase price and then have the seller credit them at closing for the 2-1 buy down. So in this example, the buyer would pay $306 for the house and the seller would pay for the 2-1 buy down. It's a great way to get into the market when rates are, you know, in a little bit higher range than they've been in certainly a few years past. So they can ease into that monthly payment with a really low rate for those first couple of years.
Okay, so question, Matt, when you're talking about building it into the contract, so this is why it's important to not only have a fantastic lender, but also have a real estate agent who understands this process. So just so that we can kind of explain a little bit, we've got the closing costs that are standard operating procedure, basically your standard SOP for getting a loan. And so you have the closing costs, but you also then would have this extra $6,000 on top of your regular closing costs that if you're needing some of that paid for, you're going to also need to have that into the contract as well. So say your closing costs are $4,000 on a $300,000 home, just in general.
Yeah.
You're going to want to actually have $10,000 to work with that the seller could potentially pay for. Am I correct?
Yes,
when in the grand scheme of things. So yeah, explain a little bit about that. So because when the 2-1 buy down is added on, you're actually adding that extra cost into your closing cost, correct?
Correct. Yes. Yeah. You could ask for the seller to pay for the 2-1 buy down costs and closing costs in addition to that if you're able to structure the deal that way. So yes, that's a really good point.
So it's really important for a buyer to understand the costs involved in purchasing a home. So you've got your down payment and then you've got your closing costs, and then if you're wanting to actually tap into this program, you'll have that added cost as far as the 2-1 buy down, right?
Yes, correct. So, and then eventually, you know, when rates come down in the future, hopefully the near future, we'll be able to do a refinance of that mortgage. And in a lot of cases, we can cover the closing costs on the refinance. So
so that's a really great addition to our conversation is even though you are in this 2-1 buy down for a couple of years, you're exactly right. If the interest rates come down at a certain point, then you can refinance and you're good to go forever and ever. You won't have to stick to that 6.5% interest rate. So there's a lot of options when it comes to purchasing a home, and buyers need to just not be afraid of that interest rate. So there's a lot of options out there.
Yes. So feel free to reach out and we can run through the numbers anytime.
Yeah, so this is Matt Cochran again. Why don't you go ahead and give your information, and I can also put it in the description below. So can you tell them how to get a hold of you?
Yes, so always use my cell phone, which is 913-553-8131.
Yeah, and I will have my contact information down below in the description, so please reach out to me. It's Anita Cordell. My email is anita@yellowbrickg.com, which stands for Yellow Brick Group, because there's no place like home. And I'm powered by EXP, so anita@yellowbrickg.com, and my email and all this will be in the comments below. So thank you so much, Matt. Hopefully this explains a lot of information of what buyers are needing to know for options. Do you have anything else to add to all of this?
That's it. I really appreciate it.
Yeah.
Thanks, Anita.
Thanks a lot, and have a wonderful, wonderful day.